Meeting is being recorded.
Good evening, friends. Today in the morning at 11 o'clock, Finance Minister Nirmala Sitharaman ji has presented Union Budget, including the Finance Bill for the financial year 2023-24. We at ICI are glad to have this quick reactions to the Union Budget. I, Chandrasekhar Chitale, Chairman Direct Taxation Committee, welcome you all. We have pleasure of presence of Honorable Vice President CA Aniket Sunil Talati amongst us, and Honorable President CA Dr. Devashish Mitra would be soon joining us. He is virtually available. Committee of International Taxation CA Sanjay Agarwal, Vice Chairman CA Kotha Srinivas, Sustainability Committee Vice Chairman CA Preeti Savla, Banking and Finance Committee Chairman and Committee for Members in Practice CA Prakash Sharma, and Vice Chairman for GST and Indirect Taxes Committee CA Umesh Sharma are present here, and soon we will be joined by Chairman Committee of GST and Indirect Taxation. On screen we also have Chairman of Sustainability Committee CA Sanjeev Singhal, and without whom we never have this particular quick discussions, CA Dr. Girish Ahuja ji, who will be explaining us the various provisions contained in Finance Bill. So friends, with this, let us start the discussion. I would now request our Vice Chairman, CA Aniket Talati ji, Vice President Aniket Talati ji, to offer his opening remarks.
Thank you very much, and a very good evening to all the members who are joining in from all parts of the country and in fact even internationally. Let me begin by complimenting the Direct Tax Committee along with the International Tax and the Indirect Tax Committee. I believe this is a very important feature that the Institute is doing, that immediately after the conclusion of the budget, in merely a few hours, immediate reactions of the very learned council members here, along with, of course, our tax guru, CA Dr. Girish Ahuja ji, is going to be shared on the proposals that are there in the Union Budget. On the stage with me, Chandrasekhar Chitale ji, Sanjay Agarwal ji, Kotha Srinivas ji, Preeti Savla ji, Prakash Sharma ji, Umesh Sharma ji. Joining us virtually, the President of the Institute, who again I must applaud. Only in the morning he has come back, but he was there in the afternoon to hear the budget, and at 2 o'clock he has given his initial reactions on Doordarshan channel, and now sir is going to share his views with the membership at large. Sanjeev Singhal ji, who's going to speak about sustainability, and for the members who are wondering how sustainability reporting standards, both chairperson and vice chairperson are here, I think we have all seen in the budget the number of times the Union Finance Minister spoke the word green, green economy, green energy, and spoke about sustainability. And all of us as council members are very proudly wearing the sustainability development goals here on our chest, because SDGs are very close to us. So I'm sure Sanjeev ji and Preeti Ben will have important aspects to share. Also in the audience, we have council members, Dr. Rajkumar Adukia ji, Sushil Goyal ji, Purushottam Khandelwal ji, Ranjit Agarwal ji, Abhay Chhajar ji, and Pramod Jain ji, and all other council members who have joined virtually. I think, yes, definitely, as we were discussing in the afternoon, our theme for the World Congress, which was, I believe, a landmark event for the ICI in 2022-23, was building trust, enabling sustainability. And this theme was decided almost 1.5 to 2 years ago. But when I'm looking at the budget, an independent review of these proposals, I think both the words which we emphasized on during the World Congress, trust and sustainability, find a huge place in this budget also. Trust because sabka saath, sabka vishwas, of course, along with sabka vikas and sabka prayas, has been the thrust of the Union government. And in this budget, of course, the bill is to be presented in the due course. But the Honorable Finance Minister made a very important statement about decriminalization of various offenses and trusting all stakeholders and coming out with certain settlement schemes. in almost 34 different acts through one bill. So yes, that bill will be presented and we will have definitely more analysis on those initiatives that the government is taking. But at the institute and through the committee that we have specifically set up for commercial and other laws, we are also seeing how alternate dispute resolution mechanisms can be used, and almost 5 crore cases which are there in the courts, can they be reduced through this various mechanisms of conciliation, mediation and arbitration. And similarly, a settlement scheme in all these acts, I'm sure will go a long way in fulfilling the objective of the government to reduce litigation and trusting its citizens. I will only restrict myself to 2-3 very important amendments that are being proposed. And coming from Gujarat, I will start with the GIFT City or the IFSCA, a huge center which is being set up in Gandhinagar, very close to Ahmedabad, with the idea that offshore funds prefer destinations like Singapore, Hong Kong, Dubai, or various other locations such as Mauritius, Cyprus, etc. for investments. And the vision of the government is, why should money go there and come here, or why international money should first go to different destinations like this and then come into India? Why can we not have our own Singapore, Hong Kong or Dubai equivalent within the geography of India, but which provides the flexibility which is required for them to invest in India or abroad? And I think with that in mind, a lot of changes have been proposed in the IFSCA. The timeline has also been proposed to be extended from 31st March 23 to 25 for the funds which wish to migrate to IFSCA. I think it's a welcome move. This will definitely give a huge fillip to IFSCA. Honorable President and myself had the opportunity to be there for the inauguration of the bullion exchange and various other initiatives in IFSCA. And there's a huge traction that we are seeing of a lot of companies, brokers, and other financial market intermediaries who want to register in IFSCA. So very important changes there. Even for cooperatives, today when we are addressing you from Mumbai in Maharashtra, and 2 states, I think Maharashtra, Gujarat, along with, of course, Karnataka, Tamil Nadu and others, where the cooperative sector is very dominant. There also, there is now provision to give them relief in income tax. The cooperative sector, therefore, is now going to expand. Startups, we are seeing India becoming the 3rd largest destination for the startup ecosystem, and giving them exemptions and encouraging startups is always welcome. Very important change in the MSMEs. We are all aware of the MSME Act and the requirement to make payment to MSMEs within 45 days or the time period stipulated thereunder. But very few companies were actually adhering it to it. Now with the proposal to have amendment in section 43B and have payments to MSME only being allowed as an expenditure on payment basis, I think it's going to usher in very good days for the entire MSME sector. We have crores of MSMEs in India. Dheeraj Khandelwal ji is here, and he had ensured we had an MSME Yatra in ICI in 75 different cities to boost MSME registration. And I think with this kind of benefit being given in the budget, more and more MSMEs will surely register themselves on the portal and avail benefits of these changes. So I think overall, a lot of changes which are being proposed. It may be 43B that I talked about. Of course, personal taxation, Girish ji is here, so I will not even dwell upon those changes of section 54 or 54F, or even with regards to these changes in the slab. But on a macro level, I can say that definitely a forward-looking budget. The middle class was feeling left out in the last 2-3 budgets with regards to certain incentives that they were looking for. And in the new tax regime, the government has clearly indicated that their focus is going to be this new tax regime without exemptions, but giving a higher level of tax exemptions to the assessees. I think with this, we must, as the institute, welcome and commend this budget in terms of the concept of the first budget in the Amrit Kal, which involves Jan Bhagidari and also Sabka Saath, Sabka Prayas. A lot of initiatives, changes, a lot of proposals, and a thrust on infrastructure is being given in the budget. We all welcome. With these words, thank you very much for giving me this opportunity. And I'm sure as the days go forward, we will have detailed analysis of this budget. And as always, after giving the pre-budget memorandum, ICI will come up with a post-budget memorandum to the government, which will also highlight certain changes which are required in these proposals. Thank you very much.
Thank you, Mr. Vice President, sir, for highlighting certain important provisions in Union Budget. In fact, you have mentioned about Gujarat and GIFT City. As far as cooperative societies are concerned, particularly sugar cooperative societies. They were purchasing sugar cane from members and they were giving them extra funds other than stated by the state governments, and those were getting disallowed. Crores of rupees were piled up in those dues. And I'm sure that from Western Maharashtra, particularly from Pune, the representation was made about this particular change, and this has found place in the finance bill. So I'm sure that the sugar cooperatives would be very happy. Besides that, even in case of manufacturing companies, which are set up by manufacturing enterprises, set up by the cooperative societies, they also will have a tax regime of 15%. So these are some of the highlights relating to cooperatives. Now, friends, let us move on to the President ICICA, Dr. Devashish Mitra. As informed earlier, after having say 14 hours journey from Australia, straight away he came here. He has gone through the budget provisions, and he is right now with us. So it's indeed our pleasure to have you. So over to you, CA Dr. Devashish Mitra, President ICAI, for your opening remarks.
Thank you very much, Chandrasekhar Chillaji, the Chairman of the Direct Tax Committee of the Institute, the Honorable Vice President of the Institute, Aniket Talatiji, and all the other dignitaries who are sitting on the dais, my council colleagues, Umesh Sharma, Prakash Sharma, Sanjay Agarwal, Kota Srinivas, Priti Savla, and their Rajkumar Adukia and the others, and of course, Dr. Girish Ahuja. I can see on the screen Sanjeev Singhal. So a very, very good evening to all of you. Let me just tell you, see, we had a program on the Doordarshan at 2 o'clock this afternoon. And one of the questions that was asked of me was that since the processing period of the returns, and it has been, as he said, that it has been reduced from 93 days to 16 days in 8 years. The question that was asked of me is this: does it affect the chartered accountants adversely in any way? And my answer to that is that, you see, we are totally supportive of the technology, you see, affecting our lives. And that, you see, if the government has used technology for the well-being of the citizens, the Institute of Chartered Accountants of India welcomes it. In this budget, there is also a mention of artificial intelligence. Now, at the Institute, we are doing everything possible to ensure that the words like artificial intelligence, blockchain, cyber security, data analytics, all this, they get a flip. So, you know, when the budget talks about technological development, we are totally with the government of India. As long as somebody was also saying that this is a middle class budget, in the sense that number of slabs of income tax has been reduced from 6 to 5. The taxable income limit has been increased from 2.5 lakhs to 5 lakhs. And in the new regime, where you see you don't get deductions under Section 80, the limit has been enhanced from 5 lakhs to 7 lakhs. Good changes. I'm sure with these changes, what will happen is people will migrate to a certain extent. People migrate to the new regime. Now, please note, the Institute had also said that the standard deduction for salaries should also be enhanced. And now what they are saying is that in the new regime, where there is no deductions, you see, standard deduction will also be made available. So that is a good change. Startups are being given a fillip or encouragement, in the sense that they have been told that, you see, if you are a startup, they have extended the date of incorporation for startup from 31/3/2023 to 31/3/2024. Please note that, you see, we are having programs on startups. You see, the Institute is doing everything possible to promote startups, and this kind of changes which help startups to grow, the Institute is very much in favor. We were told that, you see, now capital expenditure, the infrastructure expenditure, it has increased by about 33.40%. They're talking about spending 10 lakh crores on infrastructure. Now, you see, we believe that if you're going to spend so much on infrastructure, this is a good sign, and that the country will do well, and there will be greater investment. And you see, this will be good for the country as such. So the fact that there has been investment in infrastructure that has been welcomed by the institute. Long-term capital gains, no change. You can see the stock market. So there is, there was some expectation, but long-term capital gains, they are saying that there will be no change. Now, MSME dues. The institute had done the MSME Yatra, and we have been, promoting MSME. Now, the budget says that if you have some payables to MSME, then the MSME dues have to be paid. Then only you will get deductions, otherwise you will not get deductions. We believe that will also provide fillip to the MSMEs. So that is very, very important. Today, we were hearing the Honorable Prime Minister talking about green initiatives. Sanjeev Singhal is here. I'm sure he will talk about sustainability. The institute had just organized a carbon neutral conference. That's the World Congress of Accountants. Those of us who have attended this, you have noted that the Congress was a great success. And the institute will continue to support all initiatives regarding sustainability. Today in the Doordarshan interview, I was saying that earlier, the institute or the chartered accountancy profession was known by only one P, that is profit. Today, we are talking about three Ps: profit, people, and planet. Today, we are talking about ESG talk shows, which Sustainable Reporting Standards Board has organized. So we are doing a lot of activities for the green initiative. And I'm very happy to see that this budget provides a huge amount of trust on the green initiatives. So that is very, very good. I believe at the end, it is a positive budget. And as usual, the institute will do everything possible to provide suggestions to the government so that the role of the institute as a partner in nation building is always upheld. So with these words, I thank all of you for giving an opportunity. And Chandrasekhar Chitleji, I am handing over the proceedings to you. Chitleji, please.
Thank you, Mr. President, sir. And you have really taken stock of various activities of the institute and whatever we are doing in the area, which are the trust area, which has been announced by the government. In fact, for MSME, we had recently MSME Yatra, in which thousands of startups and MSME registration was done. As far as the threshold limit is concerned, you have rightly pointed out that threshold limit is not increased, but that was also one of the suggestions of ICAI, that today, out of 130 crore population, we have only 8-9 crore taxpayers, so 6-7% is very low number. So rather than increasing threshold limits, it would be appropriate that you should be able to have more taxpayers on the board, and therefore giving rebate is more appropriate manner, and same policy has been adopted by the government. So I once again thank Honorable President Sir for sparing your time when you were really tired for this 14-hour journey, and immediately you had to come to the institute. So thank you very much for joining.
Thank you.
Friends, green word was used on many occasions on relating to sustainability. In fact, ICAI has set up Sustainability Standards Reporting Board, and we have with us Chairman and Vice Chairman of SRSB. Preeti Savla is with us in this auditorium, who is Vice Chairman, and also we have Sanjeev Singhal, who is Chairman. They have taken great initiatives in this particular arena. ICAI is the first for the purpose of coining these reporting standards. So I'm sure that ICAI is moving in right direction ahead of time, and government is also now supporting this particular initiatives. So I would like initially CA Preeti Savla ji, Vice Chairman SRSB, to have her comments on the budget.
Thank you, Mr. Chandrasekhar Chitleji, Chairman, Direct Tax Committee, ICAI, and other members, council colleagues on the dais, C.A. Sanjay Kumar Agarwalji, who is the Chairman of International Taxation Committee, and C.A. Rajendra Kumarji, who is the Chairman of GST Committee, and in GST and Indirect Tax Committee, and Mr. Kota Srinivas, who is the Vice Chairman of International Taxation Committee, other senior members, and my good friends. Honorable Finance Minister in his budget today has announced a lot of times in relation to the digital and sustainability, the word she has used, and she has proposed the green growth in the budget. And as a partner in nation building, ICAI is a pioneer in formation of sustainability reporting standard board way back during year 2020 and taken various measures for achieving the sustainability development goals for the green initiatives and good governance. Friends, the Sustainability Reporting Standard Board has started ESG Talk Series, talk shows, and Sabka Vikas Satat Prayas. And also ICI has issued, this SRSP has issued the sustainability standards on sustainability audit engagements and assurance sustainability information, the greenhouse gas statements. It has built the capacity of the members by organizing certificate course on business responsibility and sustainability reporting. It has also developed the sustainability reporting maturity model version 2.0. And as it has been said by our Honorable President, sir, this was the first World Congress which was carbon net zero, that is the carbon neutral. And we have ensured that all the carbon emissions is whatever carbon is generated, that is emitted, and it is a net zero. Further, we have also organized the competition for the best slogan, and which was there for all the students from the school as well as the college as well as the CA students. We have formed the Institute of Social Auditors of India, which is a 100% subsidiary of Institute of Chartered Accountants of India, and which will regulate the social auditors, and also supporting the social stock exchanges for listing of NGOs. Friends, so ICI is not only in the financial, for the financial trust, but it is also there in non-financial things like sustainability and the growth and the green growth of the economy. So I hand over to our chairman, C.A. Sanjay Kumar Singhal, for giving his initial thoughts on this budget, what has been said by our Honorable Finance Minister on sustainability.
Thank you, Pratibhen. The Honorable President of the ICI, CA Dr. Devashish Mitra, the Honorable Vice President, CA Aniket Sunil Talati, the Chairman of the Direct Taxes Committee, CA Chandrasekhar Chitleji, present on the dais, the Chairman of the GST Committee, CA Rajendra Kumar PG, present on the dais, CA Sanjay Agrawalji, Chairman of the Committee on International Taxation, present on the dais, along with the Vice Chairman, CA Kotha Srinivasji, and Vice Chairman of the GST Committee, CA Umesh Sharma ji, our tax guru, my mentor, CA Dr. Girish Ahuja ji, present on the screen, CA Pramod Jain ji, and my council colleagues present in the auditorium at Mumbai. As the President rightly mentioned, that now the focus, there is a greater focus on sustainability, and Institute is shouldering its responsibility towards a true partner in nation building. Out of the total 6 priorities, green growth has been a priority for the government, and that has been very widely mentioned in the budget. Our Honorable Prime Minister has given us an acronym for LIFE, which stands for Lifestyle for Environment. That is, what should be our lifestyle, which helps in maintaining a sustainable environment. Our lifestyle should be conscious of the environment, and there are various measures which focuses on this. For example, the Finance Minister is focused on the green hydrogen mission, because we know that fossil fuel have a limited life. So there's a focus on the National Green Hydrogen Mission with an outlay of 19,700 crores, which will reduce the carbon intensity in line with the Panchamrit principles given by the Honorable Prime Minister during the COP26. And the target is to reach an annual production of 5 million metric ton by 2030. The Finance Minister has also laid focus on the energy transition from the fossil fuel based energy to the renewable energy, And the idea is that how India achieves the goal of net zero by 2070 or maybe earlier. Then, of course, we know that one of the limitation of using the renewable energy is the lack of the energy storage capacity. For example, lack of storage of solar power and wind power. Now, to steer the economy on the sustainable development path, battery energy storage system with capacity of 4,000 megawatt will be supported with the viability gap funding. There is also a focus on the renewable energy evacuation. Then a very important initiative of the green credit program will be launched. It will be notified under the Environmental Protection Act. This will incentivize environmentally sustainable and responsive action by companies, individual and local bodies, and help mobilize the additional resources for such activities. Another very innovative scheme which has been launched in this budget under the name PM Pranam, and it's a very nice acronym, PM Program for Restoration, Awareness, Nourishment, and Emulation of Mother Earth. It's been launched to look at the alternative fertilizer and the alternative fertilizer itself, so that the harm that is caused by the fertilizer is not caused. The fertilizer causes a harm to an extent to the soil. So how we can use the alternatives to the fertilizers. A very down-to-earth scheme that's been launched is Gobar Dhan. That is how to convert Gobar into Dhan. So 500 new waste to wealth plants will be launched under the Gobar Dhan scheme, which is an acronym for Galvanizing Organic Bioagro Resource Dhan scheme. And total investment will be 10,000 crores. And there is also a plan of pushing it through mandatory 5% CBGT mandate for all organizations who are using the biomass and distribution of biomanure. Similarly, there have been scheme like MISTI. MISTI is basically mangrove initiative for shoreline habitat and the tangible income. There is an incentive. There is a scheme called Amrit Dharohar and coastal shipping. So basically, the coastline will be strengthened, and this will be made more greener. Another important initiative is the vehicle replacement. Today, there are diesel and petrol vehicles used in the government, and the government plans to scrap these vehicles and use electric vehicles so that the carbon emissions can be reduced. So the budget is providing an outlay for the same. So overall, this budget focuses a lot on the green growth, which is very important because we must leave a planet which is more habitable for our future generations rather than less habitable. As we know that by 15th of August every year, we use the annual of Mother Earth. So in 7.5 months, if we're losing annual resources, we are borrowing from next year and next generation. This trend has to reverse, and this budget gives a clear direction for this objective. With this, I thank Direct Taxes Committee Chairman C.A. Chandrasekhar Chitleji for giving due weightage to the sustainability related part of the budget, and I would like to hand over the screen back to him. Thank you very much.
Thank you, Preeti Ben, and thank you, Sanjeev Bhai. Actually, it is not me, it is the Finance Minister and the Government of India giving much fillip to the sustainability that compelled us to invite both of you. And you are doing very wonderful job for the ICAI in this particular arena. Friends, all of us are very eager to listen the tax guru CA Dr. Girish Ahuja ji. We'll certainly come to him. Only ahead of him, just couple of minutes, I would expect International Taxation Committee Chairman, Vice Chairman to offer their quick remarks so that we can move on to Ahuja ji.
Thank you, Chairman DTC, Chitle sir, the Chairman GST Indirect Tax Committee P. Rajendra ji, the Vice Chairman Kotha ji, and on screen my guru, my mentor Dr. Girish Ahuja ji, Council colleague Sanjeev Singhal ji, and dear participants. I'm also very keen to listen to Dr. Girish Ahuja. So far as the international tax is concerned, I will just take that what are the amendments which have been made in this area. Then a few of them will be explained by my dear council colleague and vice chairman, Srinivas Kotha ji, and thereafter we'll go for the other things. So The first change which they have made for the duplication in the IFSC, there was something amendment in respect of the offshore derivative instrument, which is doubly taxed. So there is a clarification which is coming that will be clarifying the double taxation issue in respect of IFC. This International Financial Service Center is again and again getting the attention of the government, as the Honorable Vice President has also said, that the government is giving a lot of incentive here. Then the another amendment is regarding the scope of deduction of tax at lower stages in 197. The 194 LBA was not there, so that has been included there. Then there was an deeming provision of gift in section 9, for which the necessary amendment have been brought. And then in the presumptive schemes, there were some abuse were there, and in order to prevent those misuse, the amendments have been made in section 44BB and BBB, which will be applicable from assessment year 24-25. Similarly, in respect of the TP, the certain amendment regarding the timelines have been made, and there were amendment in respect of the digital assets TDS also. Then NBFC definition, there had been amendment in the section 94B, and there are tax treaty relief at the time of the TDS under section 196A that have also been brought in. And then some of the provisions where the non-resident are treated as non-filer. Now, for the purpose of deduction of TDS and TCS, they are not to be treated as non-filer. And this amendment has come from the last year, and it has effective from assessment year 23-24 instead of 24-25. This is a very welcome amendment which the government has made. And similarly, the amendment in the section 5627B, where only the receipt from the resident was mentioned to the companies, but here now the same has been made to the any person, which includes the non-resident also. There is a one change which requires a little bit reconsideration about the TCS rates. So earlier the rates were 0.5 in respect of education. Then other than the education which are not supported from the loan of the financial institution, the 5% the TCS was there above a threshold limit. Then on overseas tour package also, there was a TDS of 5% above a threshold limit, and certain other TCS provisions are there. There are certain changes which have been made, and in the case of the overseas tour package, the same has been made to 20% without any threshold limit. This requires some reconsideration also, because this 20% will be in a higher amount, and as such that requires consideration. Similarly, for the bringing the export receipts for the purpose of deductions under section 10AA, there were some amendments. So friends, so far as international tax is concerned, these are the broad amendments which have been made in the finance bill. And as such, the not much amendment have been made in the international tax, and I think that these amendments are going to have a larger impact on the competition and etc. So that's all. Thank you very much for joining us today also, and will be also available tomorrow. Now I will request my Vice Chairman, Sri Kotha Srinivasji, to explain some of the provision in details.
Thank you, Chairman, and other dignitaries on and off the dais. Thank you for giving this opportunity, as all of us are eagerly waiting to listen to Girish Ahuja sir. I will not take more than 2 to 3 minutes. Just to give a statistics of the amendments that has happened. there are almost 122 clauses that has been proposed in the direct taxes. Around 5 new sections have been introduced. There are 2 substitution sections, 1 omission section, that is section 88, and amendment of 112 sections. Coming to the international taxation, as our chairman said, not many amendments have taken place. Just to take you through some of the amendments. One is with respect to section 197, where you can claim, make an application for lower or nil rate of TDS with the department, licensing officer. Now, section 194 LBA was not included earlier. Now they have also included one section, section 194 LBA. So if there is any TDS requirement under section 194 LBA, and if you want to claim a certificate for lower deduction, you can apply under section 197. Coming to other section, section 9, to give to not ordinary resident. Section 918, where any sum of money has been paid outside India to a non-resident, it was considered as deemed to accrue or rise in India under section 9. But now they have added to that definition, even not ordinary resident. As all of you are aware, a few years back, there was an amendment in section 6(1)(a) and also section 6(6), where the definition of resident and not ordinary resident has been expanded. So those resident but not ordinary residents, if they get any sum of money as gift from a resident, they are also considered as income deemed to accrue in India, and it will be subject to tax under section 9. Then with respect to section 44BB and section 44BBB, which talks about presumptive taxation, where certain type of companies, where it is in the prospecting for extraction or production of mineral oil, they have a facility where they can declare the income at 10% of the aggregate of amounts. So there one section has been introduced, the one this thing, where if they're declaring income under this presumptive taxation, they will not be eligible to claim the brought forward business loss and unabsorbed depreciation of section 32 and section 72 respectively in the previous year, in which they they claim they declare income on the presumptive mode under these 2 sections. And the other one, which is a practical thing, is in section 92D. Section 92D talks about documentation in respect to transfer pricing. So there was a clause, section 92D, subclause 3, where it says any assessee who is supposed to maintain the documentation, whenever the assessing officer requires him to furnish the information and documentation, within 30 days, he has to furnish the same. So now the 30 days has been reduced to 10 days. So practically all the members should know that before filing Form 3CEB, which the documentation should be ready and we have to file it. So because we don't have time, the due date for filing Form 3CEB is 30th of October, 31st of October, and filing ITR is November. So once you file 3CEB, immediately if you get a notice on 1st of November, within 10 days, you may have to furnish all the documentation. So here, what I would like to say is, like the documentation should be ready before filing 3CEB. So these are some of the changes. Now over to the chairman DTC for further
Thank you,
proceedings.
Srinivas. As indirect taxes is concerned, as you are aware, the prerogative of proposing changes has been vested with the GST Council. However, we see few changes in indirect taxes. So I would request Chairman of GST and Indirect Taxes Committee, CA Rajendra Kumar P, to just highlight in a couple of minutes what are those changes.
Thank you, Chairman DTC. I would not like to take much of the time by mentioning the names of dignitaries who are here in the studios and also on the screen. We'll directly go to the GST proposals. In fact, nothing is included which is not known to the general public, not known to the professionals, because on the recommendations of the GST Council only any change can be made, and these changes are on the expected lines. Few of the provisions of the CGST Act have been amended. One very important area, or rather 2-3 important areas which amendments have taken place, is that the question of allowability of CSR expenditure incurred and the ITC on that should be allowed, should not be allowed, has been rested. As all of you know, it shall not stand allowed, because that is what is a proposal. And second is that when a dealer whose supplies are exempted, goods or services, but who is required to pay the reverse charge tax should he register. This was an anomaly between section 23 and 24, and the GST and Indirect Taxes Committee represented on it. And I must tell you, friends, the words that we use in representation have been incorporated and as in the same manner in which we wanted it. And thanks to the government, the ease of doing business has once again been established here. And with respect to decriminalization of offences, the amounts have been increased from 1 crore of rupees to 2 crore of rupees. And then we would find that caps have been placed on filing of returns, caps have been placed on the filing of annual returns not beyond 3 years. Customs, numerous changes have been brought in with respect to keeping in focus the exports, make in India and whatnot. And as usual, cigarettes, gold, they don't go out of fold. They're inside always for amendment. And as usual, there have been changes that have been made. So friends, these are some of the short caps on the GST and indirect taxes front. More to come at a later point of time. Thank you very much.
Thank you, Rajendra Kumarji. Friends, as you are aware, in the arena of direct taxes, although not much was discussed by Honorable Finance Minister, maybe there are more things in the finance bill, and definitely the profession would like to understand those things. As we are aware that in case of tax regime, more sweetener has been provided to the new tax regime, and it is sought to be discouraged as far as the old tax regime is concerned, and for obvious reasons that it includes certain exemptions, deductions, which are which may add to some complications. So that seems to be the signal of the government. As far as taxpayers are concerned, rebate has been increased and the threshold has been maintained, but for new tax regime, it is increased by 50,000 rupees. In case of cooperative societies, much amendments have been made. Substantial funds were locked up in litigation, particularly in case of sugar cooperatives. If the higher amount is paid to the members, it was considered as disallowable under section 40A. And now those litigations would stand addressed by the retrospective amendment. So we would like to know, besides even for manufacturing cooperative societies, newly established units, we will be getting certain benefits. For startups, there are certain amendments in respect of capital gains relating to property investment, relating to exemption from the funds received from life insurance policies. In TDS, in TCS, there are a number of amendments. In case of procedural matters, even for the purpose of assessment, reassessment, there are changes. For appeals, we are told that, okay, 100 officers will be recruited and the appeal, which is pendency, would be decongestioned, and maybe at junior level, small appeals can be addressed. So these are various significant amendments as far as the direct taxes are concerned. And we are really fortunate to have you with us, Girish Ahuja ji. And it has always been our pleasure to have this analysis of direct tax provisions as far as the union budget is concerned on the eve of presentation of budget. And you are ever ready with your knowledge, with your experience, with your expertise in explaining these provisions in very lucid language. So over to you, Ahuja ji, for your innings.
Good evening to everyone. Chairman of the Directors Committee, C.A. Chandrasekhar Chitale ji, Chairman of the International Committee, of course, of Direct Taxes, C.A. Sanjay Kumar Agarwal ji, Kota Shri Srinivas ji, Chairman of the Indirect Tax Committee, C.A. Rajendra Kumar ji, on the screen, C.A. Sanjeev Singhal ji, Chairman of the most important sustainability work. And Pramod Jain ji, I can see Pramod Jain ji also. He has not spoken. I don't know why he has not been given the opportunity before me to speak on that.
I did not notice him on the screen. I did not notice him. Okay.
I noticed him, sir. He happened to be my student, so why should I not notice him? Coming back. Coming back. Okay. Yeah. Let us start. Let me tell you, there have been so many changes this time, 122 changes. But out of 122 changes, let me tell you, there are about 30-40 changes which have no meaning. There was somewhere in the section 88 regarding rebate, which was there in existence for years together, was mentioned. So that 30-40 changes are that section 88, wherever written in various sections, has been omitted. Those subsections have been omitted. And that's why 44EA, 44EBC, 44EC, 44ED, 111A, 112, 100, all these sections are talking about a rebate under 88, which was omitted long back. But since the section it was mentioning, they have done away with that. That is the first thing. A new thing which is coming up is Joint Commissioner Appeal or Additional Commissioner Appeal. They are going to give small cases of appeal to them this from on now onwards. Coming to the another point also, there is going to be gold, there is electronic gold receipt also in lieu of that gold bond, whatever the gold was given, and that also has been taken in 242A. The most important change first I will talk about, which already been spoken, but let me tell you, on 5th of July, I remember 2019, an amendment had come that if I make a gift to a person non-resident outside India, and if the gift is more than 50,000, then that non-resident is not supposed to pay tax. At that time, it was the law. So then they made an amendment in section 9, subsection 1, clause BII, stating that if the gift is made to a non-resident, by a resident to a non-resident outside India, and the amount of that gift exceeds rupees 50,000, sum of money exceeds 50,000, the whole amount will be taxable as income which is deemed to accrue or rise in India, and you were supposed to pay the tax. Then the people took an advantage. The advantage was, what about not ordinary resident? The word used was non-resident. The not ordinary resident were given the gift, and they were saying it is not covered here under section 2, under section 918, and why should it be taxed? So therefore, now they have amended section 91 BII, first making in two parts: any amount of gift received by a non-resident, A, on or after July 2019, and by a not ordinary resident on or after 1st April 23, shall become taxable. And obviously that should have been taxed, but they were taking the advantage because the word not ordinary resident was missing, and they have brought this word now in this case. Next point, Agniveer, Agnipath scheme, you must have heard. Agniveer case, now these Agniveers are supposed to contribute, or they will be contributing certain amount to Agniveer Corpus Fund. Agniveer Corpus Fund is to be established, and they will be contributing, like Provident Fund, they will be contributing to Agniveer Corpus Fund. There will be a contribution by the employee, and there will be a contribution by the employer. They said the contribution by the employer will become taxable under the head salary. Nothing to worry. It is going to be taxed under the head salary, like a contribution by the employer to the National Pension Scheme, taxable under the salary. But you already know that a deduction is allowed in case of that under section 80 CCD, and similarly 80 CCH section has been inserted in case of Agniveer, that whatever contribution they make, they will get deduction, and they will also get the deduction of the employer contribution on account of that. In addition to that, whenever the money is withdrawn by these Agniveer under this scheme, under section 10 clause 12C says the amounts of withdrawn from the Agniveer shall be fully exempt in their hands. Coming to the another point, sir, let me tell you, there was an objection of 28 IV and of course section 194R, which was introduced last year, which was inserted last year. Benefit is given in kind, what will happen? And if there is a clarity was not there, so because the judgment which were made in the past was that if the benefit is given in kind only, then section 28 IV is applicable. If it is given in cash, it is not applicable. Or if it is given partly in kind or partly in cash. So just to clarify it, they have amended section 28 clause IV, read with of course section 194R. And they have made a clarification that the value of perquisite may be given in kind or in cash, or partly in kind, partly in cash. It will be taxable under the business and profession. And in the case of 194R, they have made it clear, that point which was in the guidelines, they have made it clear that even if the benefit is given in cash, or it is given partly in kind or partly in cash, or if it is given in kind, you have to see the tax is deducted at source. You know that that was at the rate of 10%. Very important change, which I noticed for our chartered accountants, also service provider. You know, we have a small, that SMSC Act. The SMSC Act, you know that, and according to the SMSC Act, you have to make a payment to small and medium class enterprises within 45 days if there is an agreement. Maximum 45 days if there is an agreement. And if there is no agreement, the payment has to be made to the small SME within 15 days. This is the law which is already there, and section 36 also says the deduction will not be if the payment is not made within that time. But now what has been done? Section 43B, a clause has been inserted that if there is any sum payable to this SME and it has not been payable as per according to the section 15 of the SME Act, in that case, the deduction will not be allowed on account of that expense to the person who was supposed to claim that expenses. So chartered accountants or the lawyer or the service, they can get them registered under SME. If you are registered SME, please note the law says the payment has to be made for your fee within 45 days. If there is an agreement, maximum 45 days. And if there is no agreement, within 15 days. This is the law. Now you tell them you are keeping quiet, but you can tell them, sir, this expense will not be allowed to you as per section 43B because the payment has not been cleared as per section 15 of the SME Act. That is all. They will not get deduction. They'll get deduction only when the payment is made. So that point is also now that 43B has been inserted. Another change, very interesting change. 44BB, 44BBB. 44BB for a non-resident or foreign company, they can presume their income to be 10% for exploration of mineral oil, 10% of the exploration of mineral oil. And when there was no profit, they used to maintain books of accounts and claim loss on account of that. You know, it is the presentive, but they had an alternative that if they want to show less than 10% or their income is less than 10%, maintain books of account, get them account audited. Now, what were they doing? Whenever there was a profit, they used to take it 10% and give the payment. And whenever there is a loss, what you used to do is they used to maintain books of account, get them account audited, and used to carry forward that loss to claim it set up in the future year. And whenever in the future year 44B benefit is given, they used to set it off. They said this setup will not be allowed. This setup will not be allowed. You will have to pay 10% whenever you are presuming 10%. Otherwise, maintain books of account, but you will not be allowed to set up from the profit. Similarly, that was for a turnkey project, 44BBB. There also you had to presume your income could be 10%. And there also the loss could be had been claimed. So there also the benefit has been withdrawn, and very clearly it should have been withdrawn, and they have withdrawn them. Coming to now, section 45(5)(a). Again, people were taking advantage of section 45(5)(a). 45(5)(a) says consideration shall be the share of the land or building plus the consideration price which is given in cash. That is the consideration under joint development agreement under 45(5)(a). Now the word cash, they used to say whatever is given in kind, whatever given by account pay check or RTGS, etc., that is not to be included in the consideration price. The intention of the law was not that. Obviously, the purpose was that besides something in kind, you are getting money also for transfer of that entering into a joint development agreement. So that they have now explained cash means that all payment which is made by check or which is otherwise not account pay check will be treated as cash, but we will have to take all the payment, whether it is account, whether it is RTGS or that, not only cash, but the entire consideration received by way of check, by way of account pay check, by any mode has to be included in the consideration price. You cannot say only the cash amount is to be included in the consideration price and not the other amount. That was the mistake which was there, and they had clarified it. Actually, it was not a mistake. But people were taking the advantage of that, and that's why they've done it. Another point, sir. You know, you were claiming deduction under interest on money borrowed for purpose of house property. That deduction is allowed to you. And you are also allowed under section 80C any amount paid for registration or any interest paid, that was allowed. So what people were taking, they were taking the benefit under 80C also, they were taking the benefit under section 24 also. At the same time, that amount of interest or that amount of what you call registration charges was also taken as cost of acquisition, cost of improvement. Cost of acquisition, cost of improvement, you can report the section 24A or B deduction which you have claimed under 80C. So deduction or cost of improvement which people were taking a benefit. So they have clarified, please note whatever interest you have claimed under section 24 or whatever deduction you have claimed under 80C on account of this, the asset, that will not be part of the cost of acquisition or cost of improvement for the purpose of section 48. Next change, sir. Change is regarding, I'm happy that they have not done away with 54 or 54F. They have continued with 54F. Their idea, the very purpose was, I was thinking that they may come out with a change. They may not, they may go for rollover and 54 may be abolished. They have not abolished 54, but at the same time, the benefit has been restricted under section 54 as well as under section 54F. Under section 54, earlier, you could invest, if you sell the residential house and there is a long-term capital gain, such long-term capital gain was exempt to the extent it is invested in the purchase of another residential house within 1 year before or 2 years after, or in the construction of a residential house within 3 years after that. The whole amount of the amount so invested, provided certain conditions are satisfied, was allowed as exemption. And if you could not invest in the house or construct the house, you had to deposit this money in the capital gain scheme on or before the due date mentioned under 139(1). Now, what is the change? The exemption of long-term capital gain under section 54 has been restricted to 10 crore. 10 crore. They are saying that rich people were doing, they're taking the benefit. They were selling 60 crore, property was 100 crore, 200 crore. There is a capital gain of 30 crore, 50 crore. They used to invest the capital gain and to take the full exemption. Now they say the exemption will be limited to only 10 crore. I said exemption. Sanjay ji, exemption under 54 of long-term capital gain, because 54 does not talk about consideration price. It talks about capital gain exemption. But now coming to 54F, and there is a confusion also. In 54F, you want to claim a benefit, you sell any asset other than residential house property, and you have to invest the net consideration price in the purchase of another house within 1 year before or 2 years after, or construction of a residential house within 3 years after, and you are getting an exemption. If you had invested the entire net consideration price, you were getting exemption, full amount of capital gain. Exemption was proportionate to the net consideration price invested. Here, what was to be invested was not the capital gain. The net consideration price was supposed to be invested. And if you invest 100% the net person price, you are getting deduction of 100, exemption of 100% capital gain. If you are investing 70% of the net consideration price, you are getting exemption of capital gain to the extent of 70%, proportionate amount. Now they have said that the net consideration price shall be limited to 10 crore. Now the question which I am asking everybody, but nobody has been able to answer correctly, that suppose I sold a house for 20 crore. There is a capital gain, I'll say, let's say 8 crore. Now I invest 20 crore, I was getting a benefit of 8 crore. If I invest 10 crore, so should I get a benefit when I invest 10 crore of 8 crore, or should I get a benefit of 8 crore multiplied by 10 crore divided by 20 crore, because I cannot invest more than 10 crore. My net consideration will be taken as 10 crore. Or I invest 50 crore, then also it should be 10 by 20. If I invest 12 crore, it should 10 by. If I invest 8 crore, then it will be 8 by 20. So there is a clarification required. I will let you know about this, but according to me, whatever it is, it appears to me that they want that it should be limited to 10 crore net consideration price investment. If you invest
Sir,
more,
sir, I
the
agree.
cost is-
Ahuja sahab,
Maji Pramod
I agree to your this view that the consideration is restricted to 10 crores. So whatever you invest, it would be 10 by 20 only. My
Correct.
view
That is
also
what
same.
I'm
Yes, sir.
thinking. You agree with me, but of course, let me make it very clear that sometimes they will do it. They will do it in the course of time, because when you read the memorandum, it is not very clear. So that's why I have said that, and I have admitted that I may be at fault. But according to me, what appears to be that it will be proportionate amount, but whatever amount invested will be taken as 10 crore. Amount invested 10 crore divided by net consideration price. Am I right, sir?
Very right, sir. Very right, sir. Very right. Fully, sir. Fully with
Let's
that.
go further.
Same.
Okay, sir. Now, I don't want to change that E54, EA, B, EC, those section 88 position has been gone. There is one more thing. You remember that self-generated asset, goodwill, or business right to carry on a business right. Manufacture or these role rights, or if it is self-generated. The word intangible assets are not there. And now they have said, even in case of intangible asset, if those intangible assets are self-generated, the cost of acquisition of that self-generated asset shall be nil. That they have specified so that there may not be a dispute, because of Srinivasa Shetty, whether you can say where it is written, it is nil, and then you can take the benefit that it is not applicable. Now they have specified under section 55 that intangible asset cost will be taken as nil if it is self-generated. Next point, sir. I have already given you one point I want to say. Sir, for making an application, when you start a trust or you go for ATG, you have to apply 1 month before the application is sought under section 1023C, or maybe under section 11, or maybe where for which exemption is certificate under ATG, you have to apply 1 month before the commencement of the previous year relevant to the assessment year for which the assessment is completed. Now, what happens is you start a trust. Trust has commenced, but no activity is there. And since there is no activity, there is no income. And since there is no income, you are not claiming any benefit under section 11 or maybe under 10. There is no income at all. Now, what will happen if there is no income at all? Sorry, I forgot to switch off my mobile. Sorry, my mistake. Chaliye. So what I'm trying to say that I was talking about what I told remember now. What was I talking about? Trust. Now they said there are two alternatives. If you have commenced the activity, you can apply 1 month before the commencement of the previous year from the end of the relevant assessment year. But if you have commenced, a trust has been established, but there is no income, and there is no income, you are not claiming any benefit under section 11, or there is no ATG also because activity has not started. Then in that case, you can take the registration from the commencement of your activity, and not from immediately 1 month before that. That section is ATG also, and as well as this 23 is also. Startup, you have to start the activity from startup 1/4/2016 to March 2023 under ATIAC. That was supposed to be done. They it will be a 31st March exemption, and I'll come to that, what you call BAC, and that is 87A. I will talk to you about 87A when I come to 150 BAC, that is the new regime. It is coming next only. Let's come to now 115 BAC. I even mentioned during the Directors Committee meeting, there is an intention of taking you to the new regime and they don't want to continue with the old regime. I said that with clear terms when I was there attending their directors committee. See this, what have they done? They have shifted the whole focus to 115 BAC, the new regime, and they want to discourage the old regime where you are having a benefit of chapter 6A. In the case of salary, you are having a benefit of leave travel concession, you are having a benefit of house rent allowance exemption, you are having a benefit of standard deduction, you are having a benefit of 1014 also certain, you are having a benefit of what you call chapter 6A deduction, all deduction, ATC, ATD, ATDD, ATTT, ATTTB, or ATQQB like me. You had a benefit of that 3 lakh rupees for being an author, and you could take a benefit of ATCCD also 50,000 rupees. So much of benefit. And then interest on money borrowed under section 23B for the purpose of self-occupied house, 2 lakh. That was also not allowed if you go for new regime. Now they want to encourage that you should go for new regime. Earlier, you had to apply, you had to opt for a new regime. If you wanted to go for a new regime, you had to opt, particularly before the due date of return, that I want to opt for new regime. A form, prescribed form was filled up, and then you had to write in your return new regime. Now, please note, from next year, assessment at 24-25, if you want to remain in old regime, you will have to apply for that before the due date of return in the prescribed form that I want to be in the old regime. Otherwise, by default, you will be in new regime. By default, you will be in new regime. Please note, please be careful. Analysis, make the analysis. I am also doing it. If you want to be in old regime, you will be duty before the due date that you are opting for old scheme. Earlier it was you are opting for new scheme. Now you don't have to say that you are not under new scheme. It is by default you are under new scheme. But if you want to go for old scheme, you know what is the old scheme. I need not tell you. But in that case, you will have to opt for. If you opt for old scheme, what benefit you get in the salary, HRA allowed, LTC allowed, section 1014 benefit allowed, certain benefit allowed, not all, and then you are allowed standard deduction that will be allowed now also. In entertainment allowance, tax on employment, you are allowed 35 AD, 35 AC, whatever benefit you are allowed full chapter 6A, ATC, ATCC, ATCCD, ATTTA, ATTTB, ATQQB, whatever benefit you can think of, nothing is going to be allowed in case of new regime. Only one benefit, which they have given you this time. And that benefit is under new regime, salary people will get standard deduction of 50,000. They will get deduction of entertainment or tax on employment, but that 50,000 is going to be there. They have reduced that point, and in case of family pension, that standard deduction they have removed. Otherwise, no benefit will be allowed to you. One benefit of Agniveer for that contribution, like a national pension, next contribution to Agniveer also by employer will be allowed a deduction under chapter 6A. Otherwise, no other deduction from ATC to ATU except ATCCD to ATCCH, ATJJAA. These are the 3 deductions allowed under chapter 6A. No other deduction is allowed under chapter 6A. Another interesting feature, sir, try to listen, very important. Earlier, 115 BAC meant only for individual or HUF. Earlier, 115 BAC was only meant for individual HUF. Now, 115 BAC will now be applicable, number 1 to individual, number 2 to HUF, number 3 to AOP, other than cooperative society. Next, what you call body of individual, whether incorporated or not, and last, any other artificial judicial person. Are you understanding this point? Person includes individual, Person includes HUF. You go for 115 BC. Person includes firm, separate. Person includes company, separate. Because for company you have 115 BAA or BAB. Person includes company. Person includes AOP. You go for this scheme. AOP, except cooperative society, because cooperative society is a separate section. Person include body of individual. Person includes any other artificial but juridical person. That also is now covered under 115 BAC. Clear, sir? These are the person who was covered. I will tell you the rate, but before I tell you, the best feature is that if your total income does not exceed 7 lakh rupees, 5 lakh raised to 7 lakh under section 87A, 7 lakh or 25,000, because maximum tax on 7 lakh is going to be 25,000. Whichever is less is going to be allowed as a rebate under section 87A. The only benefit to the salary classes, if their total income does not exceed 7,50,000, they can take the benefit. Why? Because 50,000 standard deduction will be allowed, and then 7 lakh they can claim here. Otherwise, they are not going to get any benefit of HRA. They are not going to get any benefit of LTC. They are not going to benefit of any interest on the money borrowed for self-occupied house. They will not get any benefit of 80C, 80 triple C, 80 CCD, or 80, any section except 80, I told you, 80 CCD subsection 2, 80 CCH newly inserted, 80 JJAA, that is only for business class and not for others. Clear, sir? Another point. If you want old scheme, please note, if you want old regime, please note, your total income includes profit or gain from business or profession. You want the old scheme and your profit includes profit or gain, you will apply. If you go for old scheme, then you can never come to new scheme. Yes, one chance given. Later on, you can go for change, but only once in life. Please decide next year. If you are having a total income including business or profession, please decide that if you go for old scheme, you will have to continue in the old scheme. You will be given a task to come back to the new scheme. New scheme is by default. New regime is by default. Then you will continue in new regime. Then you cannot go back to old scheme. However, if your total income does not include profit or gain from business and profession, kindly note, if you want to remain in old scheme, you will have to apply every year. Please note, if you want to remain in old scheme, you will have to apply every year. Otherwise, if you don't apply next year, by default, it will be 115 BC new scheme. So please note, you can change. Yeah, this time I'm in old scheme. I forget to file, they will take me to new scheme. Next year, I can back again apply for old scheme. That is possible if your total income does not include profit or gain from business and profession. But if you do not opt for old scheme in any year, you will be automatically taken to the new regime. Please be clear about this part. You will be automatically taken to the new regime. Next point. So far, the rate of tax under 115 BAC was on the first 2,50,000, whether you are individual, whether you are resident or non-resident, whether you are whether you are senior citizen or non-senior citizen, it was 2,50,000. This 2,50,000 has been raised to 3 lakh only under new regime. It is only under new regime. Old regime remains 2,50,000 for non-senior citizen and 3 lakh for senior citizen and 5 lakh for super senior citizen. Under the new scheme, no senior citizen, nothing. Every individual HUF firm, individual HUF, BOP, BOI, artificial judicial person, on first 3 lakh, it is nil. Earlier it was 2,50,000. Now on first 3 lakh, it is nil. Earlier, what was there? Next 2,50,000, 5%, next 2,50,000, 10%, next 2,50,000, 15%, next 2,50,000, 20%, next 2,50,000, 25%, and above 15 lakh, 30%. Remember, every 2.5, 5%. First 250, 0. Next 250, 5. Next 250, 10. 5, add 5. Next 250, 50. Next 250, 20. Next 250, 25. And above 15, 30 lakh. But now, look here. First, now it is 3 lakh difference. First 3 lakh, next 3 lakh, 5%. Next 3 lakh, 10%. Next 3 lakh, 15%. Next 3 lakh, 20%. 15 khatam ho gaye. It's 15. Now 25% slab will not be there. Above 15 lakh, 30%. Kindly note what I'm saying. The slab of 25% is not there. And they want to exhaust this only up to 15 lakh. So therefore, first 3 lakh nil, next 3 lakh 5%, next 3 lakh 10%, next 3 lakh 15%, next 3 lakh 20%. Now 15 is already over. Above 15, 30%. Clear, sir? The benefit which works out to be about 35,000 rupees. The benefit which has been given up to 15 lakh is extra 35,000 from the earlier one. After 50 lakh, you will have to decide. You want to go towards scheme. List out your benefits, because ATG also you may sometimes give. List out your benefits, sir. ATG also you may make. You also sometimes give. List out your benefit. You will be missing. If you are a salaried employee, you will be missing your HRA. You will be missing your LTC. You will be missing certain allowances. You will be missing your the standard deduction will be allowed. You will be missing your tax on employment. You will be missing ATC. You will be missing ACCC, ATCCD, ATE. If you want to, if you have any benefit of ATE, I don't know. ATE, you will be missing ATG. You will be missing ATQQB like me. I'm very afraid of that, because 3 lakh is about more than 90,000 in my case. Why should I lose that amount also? Then you will be missing 10,000, and senior citizen may be missed to work out every year, sir. And before filing a return, think over whether you want to go to old regime, apply. If you don't want to go to old regime, you are by default under new scheme. But since you are having business or professional income, though chartered accountant, please note you will have to take a decision of going to old scheme whenever you want, only once. And once you go there, old scheme, chances of coming back is only once. And that is, once you come back, then you have to remain in the new scheme. Clear, sir? This is, I wanted to tell you, 115 BAC. Another point, you have in your mind 115 BAB of manufacturing company which was established on or after 1st October 2019. The tax rate in those cases were 15%. If they are in the manufacturing and they are not carrying on any other business except incidental business of selling the production of these items, no other business, they are doing another business, they were not getting this benefit. They charge 22% or whatever and something on typically 115 BAE in case of a manufacturing cooperative society which are going to be registered on or after 1/4/2003 but before 1st April 2024. Please note this 24 may be extending next time, but here 1 year time is given to a manufacturing cooperative society registered on or after 1st April 2023. If they are doing manufacturing activity, their tax will be leviable at the rate of 15%. We have 115 BAD where it is 22%. Now, in the case of company, 115 BAA and 115 BAB. In case of a cooperative society, 115 BAD, 115 BAE. Where if you are manufacturing, 15%, all conditions exactly same. You just have read 115 BAB, Same lines, except the word company, they've used the word cooperative society. No other change. And please note 115 BAE to encourage the manufacturing under cooperative society. That is the reason they have introduced. Cooperative people were saying 22% under 115 BAA. Then now they said, why? What about the manufacturing part? They say you also take the benefit if you want to manufacture. All those conditions, new machinery, old machinery, 20%, all those conditions, what will you not get benefit? All conditions are there. And please note, you are on the similar line like 115 BAB manufacturing company, same language for 115 BAE. So be careful that that it has to be registered on or after 1st April 2023 before 31st March 2024. Yes, or very likely next year they will extend it 25. They keep on doing like that. That is a different story altogether. One mistake, everybody thinking that the 269 SS and 269T, the limit has been raised from 20,000 to rupees 2 lakh. No, it is not for all. It is only for agricultural cooperative society or agriculture development cooperative bank, rural and development bank. For them, this limit is raised to 2 crore, 2 lakh. Don't think this 269 SS 20,000 loan or borrowing, you can take more than 20,000 in cash and there will be no problem. This is only for primary agricultural cooperative society or primary agriculture market and rural development bank, and not for any other. Please note, this is 269 SS and 269T. Don't go by the rule that 20,000 yaad aa gaya, limit raised to 2 lakh. It is not that 20,000 limit has not been raised to 2 lakh. Another point. So we have section 115B, we have section 115BB, we have section 194B, we have section 194BB. 115BB talks about winning from lottery, crossword puzzle, card game, races, including horse race or gambling or any other activity of whatsoever nature. And 115BB talks about income from horse race. Right, sir? In this case, what used to happen is that 194B and 194, in these two cases, any other game. Now, in any other game was also covered under 194B and 115B and 115BB. Now, online game has been excluded from here. Online game, they have come out with a separate section. For online game, they have come out with a section called 115BBJ. New section 115BBJ for online game, where you have to deduct tax at the rate of 30%. The tax may have to be deducted whether the payment is made in cash or may be given in kind or partly in CAD or partly in cash. But you have to deduct for online game the user. Word is every person responsible for making a payment on online game. The user will be under an obligation to deduct the tax at the rate of 30%. And then they have provided that if it is in kind or partly in cash, you have to calculate at 30% for the amount. And guidelines will be issued. Same line they are doing. They will be issuing guidelines also how to. And for that, obviously, they have changed the TDS sections also. 194B, 194BB. In between, they have added 194BA for TDS, 194BA for online game. And whereas 194B, there was no TDS to be deducted if the amount did not exceed 10,000 rupees under 194B, or even lottery, even for horse race 10,000. People were saying that for each transaction it is 10,000 rupees. You win one lottery, another lottery, third lottery, each transaction 10,000. Now it is aggregate. Aggregate amount, if it exceeds 10,000, TDS has to be deducted. The aggregate amount, of course, person making payment will be one. But what I am making a payment of 10,000 this time, and next month I'm making a payment of 10,000. They say this separate 10,000, separate transaction. They have said if the person responsible for making payment of winning of lottery, crossword puzzle, card game, races, etc., and that person has made a payment during the year, in aggregate more than 10,000, he's supposed to deduct the tax at source at the rate of 30%. So that amendment has been made under 115B, 194B and 194BB. In between, there is 194BA, which has been brought for ongoing retention. And you have already heard that in case of cooperative society, withdrawal from bank, in the case of cooperative society, a lot of money has to be withdrawn with the bank. And they were supposed to deduct the TDS on that if it is more than 1 crore, 20 lakh or 1 crore. Non-filer 20 lakh, otherwise 1 crore. For cooperative society, this limit has been raised to 3 crore. This limit has been raised to 3 crore. The no TDS to be deducted under 194N in case of a cooperative society if the withdrawal from the bank does not exceed 3 crore. So that benefit is also given to you, sir, which I wanted to tell you. Dekhiye, I was thinking that I'll get the appointment time only at 6:30, so I'll be able to complete. I have read the law only up to this. Up to this section, I have read it, but two more things. Updated return. Under section 153, updated return, you had to pass an order, assessment order within 9 months. They said, no, this will be now increased to 12 months. Even in case of assessment, reassessment, notice, you have to give the notice in the specified time. They have specified the time as 3 months now. Within 3 months, you have to give the notice for that, all those things. So that point has also been changed. And if you want me to read something, I'll have to look up the papers. I'm not in the habit of looking up the paper at the time when I'm speaking, but I could go through only up to this amount. So therefore, I have talked to you about, let me see the papers if I can do it justice for adding more in the value. One more thing, when you're donating to another trust, you can't donate per corpus, but you can donate out of the current income to the another trust. We were taking 100% exemption, and then they were taking 85% spending and 15%. They showed nothing to it. It will be, whenever you're donating, we will treat as 85% application, not 100%. So that point is also very important. And there are so many changes in 12A or what you call 11 or 12. I'll let you know about those changes in the due course of time. I have to go, I have to prepare everything, and I'm not in the habit of seeing the papers, but let me see what can best be done at this moment. I have done about this. There is a question, one can ask the question if the questions are there of the topic which I've already discussed. The topic which I have not discussed, I will not be answered that questions at this moment because I've already told you I couldn't get time to read everything. I wanted to read those, but some or other, there are so many amendments, so many changes, which maybe small, very important changes I've done, maybe small changes which may affect you, but in the due course of time, of course, by tomorrow, I'll be ready to come. Very important, very important, very important. Please, I'm telling you what was going to happen. Please try to listen, very important change. Sometimes what happens is, in the government case also, and in many cases, people have not deducted the tax at source. And I have to include that income because there is the income which is earned, and I have to include this income. I have paid tax on that. Now, in a subsequent financial year, they deduct the tax, and after deducting the tax, now they have made the payment to me. They have made the payment to me after deducting the tax. The question is, the AO does not allow me credit of that amount. They said nothing doing that. This is not showing in your 26 AS, and when there is nothing, if the TDS has not been deducted, how can I give you the credit? Whereas the law is that credit has to be given only in the previous year in which income is taken. I have taken the income last year, but my TDS has been deducted after 1 year or maybe after 2 years. And in the case of government, the TDS is deducted on the basis of cash system of accounting. They don't have double system of a double entry system. They deduct TDS only the payment is made. Whereas I have to show my income on accrual basis. I have shown my income, I have paid tax on that, and they say you will not get credit of that tax which has been deducted by the deductor after 1 year or maybe after 2 years. Now, what is the course of action? We were always saying, sir, this is the difficulty we are facing. The client has deducted the client has deducted tax in the next year, and made the payment to me after that, and I am not able to get the credit of the tax which has been deducted by my client in the next year. How will I do that? Now they have introduced section 115, subsection 20. Well, sorry, 155, subsection 20, recomputation. That is called rectification and recomputation, and then you go for rectification. You know what you do? You will have to make an application within 2 years of the date of tax deducted, that this tax has been deducted. I have not been able to get the credit of this tax because, and I have already paid the tax in the past when I showed that income. So then the AO, you make an application in prescribed form, AO will rectify under section 54 your order, and you will be given the credit of that tax, and that means refund will be granted to you under section 244. But unfortunately, the interest is not to be given to me. I should be given interest because I paid tax 2 years back. Today, today he has deposited the tax, and I have already paid tax. When you are giving me refund, you should pay the interest up to 6% for that also. But they said no, interest will be paid only from the date when you have made an application. From that date onwards, interest will be paid from the date when you have made application to the date of refund, to the date of refund. So you have to read section 244 and also read section 155, subsection 20. It is a very good move, but of course, the only difficulty is regarding interest part. Otherwise, I have no objection. I wanted this to be there, and it has come, so it should be accepted. Already said that liberalization remittance scheme, there was a system that in case of tour operator, you were supposed to deduct 5%, and without threshold, now you are supposed to deduct 20%. In the case of education, it was 5% or 0.5% if it was a loan taken, 0.5% for LRS, or 5% if loan was not taken. There it remains the same. Any other case under liberalization scheme, of the rate will not be 5%, sir, it will be 20%. You will have to take a refund of 20%, even if you have made a gift to your relative. 20% tax has to be deducted. That point is 61G TCS, which is 0.5% when you are taken a loan and remitted money for education of your children, and if you have given, or yourself, or you have not taken a loan, 5%. But if it is for tour operators, then it is, earlier it was 5% without threshold, it is now 20% without threshold, and in case of any other case also, it is 20%, not 5%. So that point is also very important. Some other issues may be also there, but I don't think, I'll have to check up whether they are important or not. But whatever I could read, I think this can work out. But at the same time, let me read the whole night and then come back to you for a lecture, which will be, of course, interest to all of you. Thank you very much, sir. Sir, you are mute. You are on mute, I think.
Am I audible?
Yeah, now you are audible, sir.
Yeah, thank you, Giriji, for taking us through various topics from the finance bill. All the more than 100 changes are there, so it is difficult to go through each and every change. But you have really covered all the significant changes, and we at ICI and Direct Taxation Committee are really thankful to you, and your continued support is available to you. There is one query which has come about section 43B and provision relating to MSME payments. Now I have made purchases of say 1 lakh rupees, and there is GST of 18 lakh thousand rupees. So maybe I'll claim deduction only of 1 lakh rupees and not 1 lakh 18,000. So as far as disallowance is concerned, whether it should be 1 lakh 18,000 or 1 lakh, that is one query. I believe that
What is the amount payable to me? Amount payable to me is 1 lakh.
payable would
Or
be
1 lakh.
1 lakh 18,000.
Amount payable, what is the amount payable for that? Of course, they said it's a different story that GST is not to be included for the purpose of TDS or all that thing. That is a different story, sir. But the amount of deduction of 1 lakh 18,000, is he claiming a deduction? He's taking a credit of 18,000.
Correct.
Am I right?
Yes. Yes,
He's
that's
taking
right.
a credit of 80,000 rupees, and amount payable to me is 1 lakh 18,000.
Yes.
So why should he be allowed the amount paid, some payable to me is 180,000. So he should not be allowed a reduction of 1 lakh 18,000 from my point of view. But let
Sir,
me
only
read
one-
again, but
only
I
one
think 1 lakh
submission.
some payable.
One submission that section 43B starts with the wordings deduction otherwise allowable. So otherwise allowable deduction is only 1 lakh rupees, because since you are claiming credit, that 18,000 deduction is not otherwise allowable. So should we say that it should be restricted to 1 lakh disallowance and not 1 lakh?
You want to say the section starts with that? Let me check up. Yes, both can be possibility. Check up. Let me check up. 43B says right from the beginning. 43B says notwithstanding in any other provision, a deduction otherwise allowable under this act in respect of any sum payable. Agreed. Otherwise allowable is only 1 lakh. So
Yes.
Agreed.
Right.
Payment is like 80,000, but pay allowable to me is only 1 lakh. So 1 lakh will be there. Very rightly pointed out.
Yes, sir. And another query is how because this accounts also will be subject to tax audit, and also in respect of the payer who is liable to pay to MSME, he may not be aware that this particular enterprise is MSME. So how the taxpayer as well as the auditor should point out that these amounts were not payable? And
this will come in Form 3CD, and it is also written that in this case that proviso is not applicable, that if you make the payment on or before the due date under 139(1) will be allowed this deduction. That proviso is not there for this item. So therefore, you will have to check up that otherwise also section 36 MSME, you have to give the report that the payment has been made within the requisite time or not. That is section 15 of the act. That is already there.
Yes,
So,
it is
please
already
not
there.
more-
It is already there, but in many reports we find that there is a clause put by the entity that we are not aware as to which entities are MSMEs, and to the extent information is
No, but that
available.
registration certificate, you'll have to take an undertaking from the, you'll have to take the undertaking from the management.
Yes.
Whether all those SMEs are registered, you have been there registered or if they are registered, which are registered. And have you made the payment to them within the time? That's the way or the other way check up whether they are registered or not. Every time, even in the board meeting, it is decided. If the audit committee, we find out that the compliance has been done about MSME or not. So that compliance also you can see.
Yes, so these were the questions as far as this section 43B is concerned. So thank you. There are other queries, but they are not really relating to this finance bill. So at this point of time, we are not taking up those queries. So with these friends, we had discussion on this particular union budget. Initially, our vice president and president addressed us. Then we also had, was mention of green and sustainability. So our sustainability committee chairman and vice chairman also informed about the foray of our sustainability standards reporting board. Then on international taxation, we had chairman CA Sanjay Kumar Agarwal and vice chairman CA Kotha Srinivas. Both of them briefly explained about the information which is there. As far as GST and indirect taxes is concerned, CA Rajendra Kumar also elaborated on whatever were the provisions. We missed presence of CA Pramod Jain because we could not notice him on the screen. He was not there. Now he has left, so we are not having benefit of his presence. But Kotha Srinivas wants to supplement something. So let him supplement. And Thereafter, we will conclude the meeting.
Thank you, Chairman. So Girish, sir, just one doubt with respect to 54F. If you see that it says provided further that where the cost of new asset exceeds 10 crore rupees, the amount exceeding 10 crore rupees shall not be taken into account for the purpose of this subsection. Again, in the proviso, it says provided further that the net consideration in excess of 10 crore shall not be taken into account for the purpose of this subsection. So 54F is, as we know, it's a proportionate deduction. The formula is capital gains into investment in new asset divided by net sale consideration. So as per this reading, capital gains will be there into amount invested in new asset, capital asset, it should be restricted to 10 crores and divided by net sale consideration, that also should be restricted to 10 crores if it is exceeding the 10 crores. This is what I understand, sir. If you have any different view, you can just.
Sir, the purpose is defeated. Sir, Kota sir, the purpose is defeated. The purpose of section 54F is to give you proportionate deduction. Whereas in 54,
Not to
what you have
take
to
more.
invest is capital gain. Here, what you have to invest is the net consideration price. But at that time also, I pointed out, this is my view, but I can be wrong. I said I will check up with this. We will have a discussion on this. Come back to you. Institute also is supposed to give the post-budget amendments memorandum also. We will discuss this and we'll find out from the person who made this law what is his intention. But memorandum is not very clear to say that the benefit will be 10 crore minimum to a maximum will be 10 crore.
Maximum.
This way it is not said.
And one more thing, after this Ahmedabad Urban Development judgment of Supreme Court, they have made some amendment in section 10 and included some state government, central government constituted enterprises for urban development, for housing, etc. So whether it has got anything to do with that Supreme Court judgment?
Sir, I have not read that, I told you, because 12A or 11A, you have to devote a minimum 2-3 hours to
Yes.
understand what exactly the changes are. But at the same time, was not allowed on account of payment made by the authorities to the state government of anything. Maybe on those lines they have done it. Let me check up. I have not been able to read that. I'll take it up and let you know about it, sir. And we have to discuss in the directors committee also
Yes,
these
sir.
things. So
Yes, thank you, sir. After devoting
Yes,
substantial
but-
time, you bring out Amrut out of the finance bill and any provisions. So we wait for that Amrut in our Amrut Mahotsav of independence. Now, let
we
me.
have read the fine print. So much, we have not been able to read all the fine prints.
Yes, certainly. So let me now hand over this session to Honorable Chairman, GST and Indirect Tax Committee, C.A. Rajendra Kumar, for conclusion.
Thank you, Chairman, Direct Taxes Committee, Chitle sir. Very esteemed Central Council members present on the dais, Sanjay Agarwal ji and Kota Srinivas sir. Our guru, our mentor, our guide, CA Girish Ahuja ji, who is a master class and who, with his budget speeches, has taken the floor by storm, I must say. Sir, sincere thanks to you. You have been a great sense of motivation and support for the committees of the ICAI in delivering budget lectures. So I must propose a hearty vote of thanks to your personality. And of
Thank you,
course,
sir.
thank you, sir. Our president and vice president deserve our commendation and deserve our respect for steering us from the front. In fact, especially our president, who has flown in from abroad and has handled these sessions so very well. He has been terribly busy since morning, handling various budget programs on television, on press, print media, etc., and so on. Our vice president, sir, for being here with us, and all the committee chairman and vice chairman who have been great support for this whole day today. Sanjeev Singhal ji for making his presence to felt. Preeti Savla ji for also the SRSB's initiatives that were covered in the budget. And Umesh Sharma sir, our vice chairman of the GST Indirect Taxes Committee. It's been an amazing session all around. And of course, many more things to come. And the staff of the Direct Taxes Committee, International Affairs Committee, the GST Indirect Taxes Committee deserve a special mention for their unstinted support that they have been rendering. Thank you very much. And let us all meet again, members, very soon. Thank you.
Thank you all. And before we depart, let me just inform you that tomorrow from 11 to 1, we have another session planned for discussion on union budget that will be addressed by CA Anand Rathiji from the perspective of impact of this finance, the budget on stock exchange. Then on direct and indirect tax proposals, direct tax and international tax proposals, we have our former president, CA Nihar Jambusari Ji, and former council member and chairman of direct tax committee, CA NC Hegde Ji. So all these three stalwarts would be discussing the provisions of budget from different perspective. So as far from this room, now let us take leave, but not before reminding you to rejoin at 11 o'clock tomorrow. Thank you.
Thank you. Thank you.